Finland, a nation once lauded for its economic stability and social welfare model, finds itself grappling with a formidable economic storm in 2025. The country is facing a dual crisis of rising unemployment and escalating debt, casting a shadow over its economic future. This confluence of challenges threatens the very fabric of Finland's well-being, impacting its fiscal sustainability and labor market resilience. The statistics paint a stark picture of the economic difficulties Finland currently faces. Unemployment has surged, exceeding projections and reaching levels unseen in recent years. Simultaneously, the nation's debt continues to climb, raising concerns about long-term fiscal stability. The Finnish government is now tasked with navigating this treacherous economic terrain, seeking solutions that can mitigate the immediate crisis while also addressing the underlying structural issues that have contributed to the current situation. This essay will delve into the complexities of Finland's economic storm, examining the factors driving the rising unemployment and debt. It will analyze the effectiveness of current government policies and explore the potential implications of these trends for the future of the Finnish economy. The essay concludes by emphasizing the need for comprehensive and sustainable solutions to weather this economic storm and secure a more prosperous future for Finland. One of the most pressing issues confronting Finland is the sharp rise in unemployment. After years of relative stability, the unemployment rate has climbed to a worrisome 9.4%, a significant increase from the previous year. This surge in unemployment signifies a weakening labor market, with businesses hesitant to hire and many individuals struggling to find work. The increase in unemployment translates to a stark reality. More than 20,000 individuals have joined the ranks of the unemployed, while the number of employed individuals has decreased by 32,000. This trend is particularly alarming given that Finland's total employed population now stands at 2.57 million, indicating a shrinking workforce. The most concerning aspect of Finland's unemployment crisis is the disproportionate impact on young people. Youth unemployment has reached a staggering 15.5%, indicating that a significant portion of the younger generation is facing significant challenges in entering the workforce. This situation not only has immediate consequences for their livelihoods, but also poses long-term risks for their career prospects and overall well-being. Addressing youth unemployment is thus a crucial priority for Finland if it hopes to secure a brighter economic future. Compounding Finland's economic woes is the problem of escalating debt. The country's debt-to-GDP ratio, a key indicator of fiscal health, has risen to 75.8% and is projected to increase further in the coming years. While Finland's debt level is not yet at crisis proportions, the upward trend is concerning and demands attention. Several factors contribute to Finland's growing debt burden. The government's budget deficit, which reflects the gap between spending and revenue, has widened considerably. This means that the government is spending more than it takes in, forcing it to borrow to cover the difference. The widening deficit is partly due to increased spending on social programs, which are under pressure due to the rising unemployment rate. Adding to the concern is Finland's high level of external debt, which currently stands at 204% of GDP. External debt represents the amount of money owed by Finnish residents to foreign entities. While this figure has decreased slightly in recent quarters, it remains elevated and exposes Finland to potential risks associated with global market fluctuations. For instance, a sudden rise in interest rates or a depreciation of the euro could significantly increase the cost of servicing this debt, putting further strain on the government's finances. Section 4. External pressures and internal struggles. Finland's economic woes are not solely a result of internal factors. The country is also facing a number of external pressures that are exacerbating its economic challenges. The ongoing energy crisis, triggered by geopolitical tensions and the war in Ukraine, has led to soaring energy costs. This has had a particularly severe impact on Finland, which is heavily reliant on energy imports. Furthermore, Finland has been hit by weakening demand from some of its key trading partners, particularly Germany and Sweden. These two countries are major destinations for Finnish exports, and the slowdown in their economies is having a ripple effect on Finnish businesses, particularly those in the export-oriented manufacturing sector. Internally, Finland is grappling with structural challenges that have long hampered its economic performance. Productivity growth has been sluggish in recent years, making it more difficult for Finland to compete in the global marketplace. Additionally, Finland is facing a demographic challenge, with an aging population and shrinking workforce. This demographic trend puts upward pressure on social spending and limits the potential for economic growth. Section 5. Austerity measures, a controversial solution. In response to the mounting economic challenges, the Finnish government has implemented a series of austerity measures aimed at reducing spending and reining in the growing debt. These measures include cuts to welfare programs, reduced funding for social and healthcare services, and a 1.5 percentage point increase in the value-added tax, or VAT. The government has also announced plans for public sector job cuts, further tightening the belt on public spending. While austerity measures are often seen as a necessary evil in times of economic hardship, they are not without their critics. Opponents argue that these measures disproportionately impact the most vulnerable segments of society, exacerbating inequality and undermining the very social welfare model that has long been a cornerstone of Finnish identity. The debate over austerity measures reflects a broader societal discussion about the role of government and the balance between fiscal responsibility and social welfare. While there is no easy answer, it is clear that Finland needs to find a sustainable path forward that addresses its immediate economic challenges without eroding the social fabric that has made it such a successful and equitable society. Section 6. Implications for the future. The current economic storm facing Finland has significant implications for the country's future. The rising unemployment rate, coupled with the government's austerity measures, risks creating a vicious cycle. As more people lose their jobs and social safety nets are weakened, consumer spending could further decline, leading to lower business investment and slower economic growth. This could in turn lead to even higher unemployment, perpetuating the cycle. The escalating debt burden also poses a significant risk. If the debt continues to grow at its current pace, it could eventually reach a point where investors lose confidence in Finland's ability to repay its debts. This could lead to higher borrowing costs, making it even more difficult for the government to finance its operations and potentially triggering a sovereign debt crisis. Moreover, the current economic situation threatens to erode Finland's social cohesion. The country has long prided itself on its strong social safety net and its commitment to equality. However, the austerity measures and rising unemployment risk widening the gap between the rich and the poor, creating social tensions and undermining public trust in the government. Section 7. The path forward, navigating the storm. Navigating the current economic storm will require a multifaceted approach that addresses both the immediate challenges and the underlying structural issues facing the Finnish economy. In the short term, the government needs to find ways to stimulate economic growth and create jobs. This could involve investing in infrastructure projects, providing tax breaks to businesses, or increasing government spending in key sectors. However, short-term stimulus measures alone will not be enough. Finland also needs to address its long-term structural challenges, such as its low productivity growth, aging population, and reliance on exports. This will require a concerted effort to improve education and training, encourage innovation and entrepreneurship, and diversify the economy away from its dependence on a few key industries. Ultimately, the success of Finland's economic recovery will depend on the ability of its leaders to build a broad consensus for reform. This will require engaging with all stakeholders, including businesses, labor unions, and civil society, to develop a shared vision for the future and a plan for achieving it. The road ahead will undoubtedly be challenging, but with determination, collaboration, and a commitment to its core values, Finland can weather this economic storm and emerge stronger on the other side. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.